It's live with the mortgage calculator. We will get started here in just a few minutes, just waiting for us to get live on all the different platforms. We are streaming this on YouTube, Facebook, and LinkedIn. So give us a moment to go live on all the different platforms here. In the meantime, as you tune in, feel free to drop a comment there. We put the chat up on the screen. And we'll get started here momentarily. Hope everyone's been having a great week so far. And hope the loan officers out there are closing some loans. Feel free to drop a comment here as you tune in. Mark, thank you for tuning in. Thank you for the comment. Appreciate it. Raul, thank you for the comment. Harriet, thank you for the comment. Susan, thank you for the comment. Appreciate everybody tuning in nice and early. And it looks like we are good to go. So we'll go ahead and take the chat off the screen and get into it. But thank you everyone for commenting. Feel free to keep dropping comments and drop any questions you have as we go through here today. Welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every day on this show is go through some live mortgage rates. And then we do a deep dive into a different topic every day. Now, today's topic is something we're familiar with here because we specialize in non-QM loans, which is Condotel Loans. So definitely something very specific. There's usually not many outlets out there for this, but we do have some here at the Mortgage Calculator. So our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and a realtor, is going to do a deep dive into Condotel Loans here shortly. But before we do that, we'll go ahead and pull up our pricing tool so we can pull up the actual live mortgage rates for today. So Nick, let's go ahead and pull up the pricing tool and see what the market is looking like this morning.
All right, change my screen. Let's check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates for today, August 17th, just after 11 a.m. Eastern, as well as the APR with all the fees. If you'd like a full breakdown, itemized list, a loan estimate with all the fees, please get one of our team members. We have 300 plus licensed loan officers in 24 states, and we can do our DSCR business purpose loans, such as for the Condotel is one of the options, in 44 states. So for today, for our basic scenarios, we're going to set up a identical scenario so we can compare across the programs. We'll set a loan amount of $400,000. We'll set an LTV of 80% loan, 20% down payment. We'll set a desired price of $99. That means we're going to ask the computer for the best rate at one discount point in cost. We'll compare our options here, conforming, conventional. We'll start with first, then we'll check out our FHA rates this morning, and then we'll look at our expanded guidelines, also known as non-QM. We also offer VA and USDA. Remember, VA is only for our eligible vets and active service members. If you are eligible, let us know. We can quote it, no problem. Same with USDA. That's only for eligible properties in a rural area. Please let us know. We'd be happy to quote it, no problem. We'll start with conforming conventional. Keep the scenario the same for all these. Purchase, 30-year fixed, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 and an estimated debt-to-income ratio of 40%. So with these basic settings, as we do every morning, let's check out the rates. They've going up just a touch from all the Fed news, unfortunately. So best option today, 7.375 for one discount point in cost, a little more than yesterday, for 7.542 as the final APR. So this is a good option for our customers that qualify for conventional. Hopefully this is the peak rates and they start coming down here. But let's check out an option for our customers that may not quite qualify for conventional. Usually the next option is an FHA program. FHA does allow a little more leniency on credit type of issues, as well as a much higher debt to income ratio we can use. However, for the scenario, we keep everything identical. All we've changed is the program, so we can compare apples to apples across the programs. And this morning, the best option for FHA, 6.625 rate, 1 discount point in cost, for a final APR of 7.217. So again, it's just a touch cheaper if our customer qualifies for both conventional and FHA. FHA in this example is actually a little bit cheaper, so definitely check that out if you're qualified for both. And if you have to use FHA, this is definitely welcome news with the recent changes to the MI that are making the FHA definitely more attractive. Now, if our customer cannot qualify for FHA or conventional, that usually poses a problem for most banks and lenders, don't have other options. But fortunately, we have over 5,000 additional options for our borrower under expanded guidelines, also known as non-QM, where we can use alternative income. So this is where we specialize at the Mortgage Calculator, solving these problems for our borrowers. So everything else will stay exactly the same, but notice we have a new option for non-QM. That's our income we can select. So full doc is what we use for conventional and FHA. So we'll typically select this option to take advantage of one of the alternatives, such as asset-related programs, business bank statement programs, the investment property programs we'll talk about in a minute. Our personal bank statement 12-month is the most popular. That's what we'll always use for our demo. We also have RSU stated, VOE, 1099, P&L, and no income CDFI, all kinds of different options. But the most popular here is our 12-month bank statement, and that's for our self-employed borrowers. Most of the time when self-employed borrowers submit tax returns, they may have various write-offs and may not qualify at all, or may not quite qualify with as much income as they really need to get the home they really want. So in this case, we'll solve that problem for our borrowers by using no tax returns at all. We will simply use their last 12 bank statements to determine a debt to income ratio of 40% in this case, using just their cash in the bank, no tax returns at all. So our self-employed borrowers typically qualify for double, triple, quadruple the income using this method, and therefore can now qualify for the home they really want. So let's check out the non-QM solutions this morning. And our best option here at the top, 7.375, 2.125 discount points, and a final APR of just a touch under conventional. Again, this is amazing when these results are coming in under conventional for 7.479 final APR. So even using bank statements for some of these non-QM options, we can get almost identical rates and costs to conventional. Now, there are other programs that do cost more. So you'll see some of these options have a little bit higher rates. Some of these may allow things like bankruptcies and foreclosures and other types of credit events. So tons of flexibility once we get into these non-QM programs to not only solve our income issues for our potential borrowers, but also solve any other issues that may be present with the deal, such as bankruptcies or foreclosures, or our topic for today, where we have different condo exclusions that would otherwise exclude it from a conventional program for property exclusions. And before we go into Jose's Condotel example, we always want to do our investment property live rates. So we love to work with investors, whether they're first-time investors or seasoned investors. We have the options for them. So we'll set up the same scenario, 80 LTV, 20% down payment, and we'll compare our investment property options. We'll start with conforming conventional, then we'll go into expanded guidelines, also known as non-QM, where we have the other options to use other income. Now remember that government programs, FHA, VA, USDA are not eligible for investments. So we'll simply compare these two. So we'll start with conforming conventional. Everything else is identical to all our other demos. However, we have changed the occupancy to investment. So this will show us the adjustments that the conventional programs have added for investment properties. So about the same as it was yesterday here, 7.5 rate, 4.25 discount points and cost, very expensive, and a final APR of 7.775. So this is a good option for our borrowers that qualify for conventional, but unfortunately, I don't even think we could even do this loan because these discount points probably exceed the legal limit. So most of our investors and us as consultants would definitely recommend our borrowers check out other options, specifically options at a higher rate in order to reduce the discount points. 4.25 discount points in this example is $17,000. That's a lot of money for anybody, especially investors that are savvy would typically rather spend that money elsewhere in other investments and usually don't mind a little bit higher rate as long as the property cash flows. That's where our final demo using our expanded guideline investment property options will come in. So we'll set up the same scenario, 80 LTV, 20% down payment, investment property. And now that we've selected expanded guidelines, we can choose our income. So our most popular income option for investment properties is our DSCR option. That's because it doesn't actually require any income or employment from our borrower. We simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage that we're proposing here in this example, that's a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. We even have options for ratios under 1.00 where the property does not cash flow on a monthly basis. For our demo though, I always select 1.5, which is the highest value that we can input, which will show us all of the programs that we can offer. And the final thing we must select is a prepayment penalty. 3 years is standard on a non-QM investment property. There are options for 0 that will limit the amount of loan programs and cost much more. And there are options for 5 years, which will cost much less for our borrower, but will again limit the amount of loan programs. 3 years is pretty standard. So that's what we always select for our demo. So let's check out our DSCR rates this morning. So the final option here for DSCR, 8.125, 0.6 discount points and costs. So obviously we solved our investor's problem here with the discount points. Puts our final APR at 8.178. So this is a great option for our borrowers to take advantage of the DSCR programs. Most of our borrowers that are presented with a conventional option at 7.775 and hefty discount points with an APR here of 8.187 with a DSCR will typically always choose the DSCR program, not only to save the discount points, but for other flexibility as well. You can do multiple loans at the same time, no employment, no income, definitely a lot more flexibility. Also, you notice some of these other options here at maybe a little bit higher rates and costs may allow things like bankruptcies and foreclosures that would otherwise disqualify us, and may allow us to use short-term rental income, and to segue into our example today, may allow us to use the program for different property types, such as our very unique property type that we're discussing today, which is going to be a condotel. So let me pull up my graphic here. If the graphic will come up. So a condotel is definitely a very specific type of property of a condo, obviously, but with hotel features. So I'll let Jose explain exactly what makes it a condotel and not a condotel before we go into the live examples. But this is a very popular request, especially when I just mentioned short-term rental income and other types of popular property types these days, where more condos are probably converting to more of a condotel type of setup, where short-term rentals and non-owner occupants are basically preferred and basically the method of delivery there. So before I put too many words in Jose's mouth, I'll let you go ahead and define it, Jose, and then we'll check out your examples.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Now, condotels are confused a lot of times for properties that allow short-term rentals, right? Because we do have a lot of condos out there that do allow short-term rentals, just like a condotel short-term rentals. The difference is going to be that a condotel has an actual hotel component, which is going to have a short-term or a front desk, for example, and is going to have usually deed restrictions that may possibly not allow the owner to occupy the property on a full-time basis. That's going to be the main difference between a condotel and a regular condo that allows short-term rentals. The other component you have to be aware of between the two is that a condo that allows short-term rentals is not going to have as restrictive of a financing option as a condotel, right? And usually a condotel in the legal description somewhere is probably also going to have hotel component, and so that's something that the investors, secondary market investors, will be looking at when they're buying those loans, right? If it's a condotel, it's definitely a more restrictive bucket than if it is a short-term rental property. Now, that's something that I definitely recommend our MLOs out there to discuss with their realtor partners, and to also discuss with their borrowers who are also the buyers of these properties, because they may think that the properties are the same, but then when they're doing their analysis, they have to be aware that the loan to values are going to be lower and their rates are going to be higher. And they are also going to have other restrictions. Keep in mind that these financing restrictions are going to affect the manner in which your property will appreciate in value. As we know, the condo tells a lot of times typically are, like I was saying, low LTV loans, and in most cases, you're going to get a lot of cash buyers only, as opposed to regular condos that may have a legal short-term rental component where you can take it to a higher LTV, or at least lower interest rates. So we are able to, due to non-QM, finance these condotels. Um, Now, what you're going to find also is that we do have multiple options for the condotels as far as income, right? Where we have full doc options, we have bank statement options. Then, of course, if we have the bank statement options, we also have profit and loss options, asset utilization options, and believe it or not, we even have a DSCR option. Now, the DSCR option for the condotels is going to be very limited. Be aware, because of the manner in which condotels are. Some condotels, do have maximum occupancy times by any given occupant, right? Some of them say you can't be there longer than 30 days. Some say you can't be there longer than 6 months. So be aware when you are pre-approving a condotel that you inquire about any of these occupancy restrictions, and then see how that is going to affect the income calculations for that property, especially for the DSCRs, right? If it's a short-term rental component, it's probably what you're going to be needing to look for these condotel properties. So the first example I have here is primary full doc. Now, here it is 70% usually across the board, 70% maximum LTV for these condotels. So in this example here, we have 8.375 as our lowest cost option, and 7.25 as our lowest rate option. Then we have our condotel. Now, let me go back to this. Now, again, I just wanted to emphasize, very important when you are pre-approving the borrower, especially if he's a primary occupant, that you inquire the occupancy restrictions of that condotel. Okay, that's a very important part. I can't stress that. Condotel investment, 70% LTV. You see that the rate does increase a little bit due to the investment component. 8.625 is our lowest cost option. 7.5 is our lowest rate option, and these are both full doc purchases. Now I have a full doc investment cash out So rate goes up a little bit more, 8.75. We're still at 70% though. 8.75 as our lowest cost option, 7.5 as our lowest rate option. So now I'm giving you a little bit more variety here. We have a bank statement option for Condotel for an investment property. Again, 70% LTV. You see the rate does go up a little bit for the bank statement component here, where we can actually do 9.49% as our lowest cost option, and we can buy it down all the way to 8.125. And our primary Condotel bank statement cash out rate's a little bit better because it's not investment property. So we're looking at 9.25 as our lowest cost option and 8.25 as our lowest rate option. And now, of course, we could not end the show without talking about our favorite DSCR component, right? We are all about debt service coverage ratio loans here at the Mortgage Calculator. And to remind you all, how the debt service coverage ratio is calculated, we basically get the uh, market rent or lease rent, whichever is the one that's applicable for your deal, divided by the housing expense, PITI. And in this case, since it is a condotel, we're also going to add in the monthly association fee. And we're getting 9.75 actually with a little bit of a lender credit, and we can do 8.875 as our lowest rate option. So there are very limited options to condotels doing DSCR, but at the Mortgage Calculator, we do have them for purchases and for refinances, rate and term, as well as cash out. So look to us for all of your non-QM and agency options, and we'll be sure to scour our more than 5,000 product options to come up with the best options for all of our borrowers.
All right, there's no questions here, but Jose, go over one more time what makes a condotel, even if it's not written as a condotel, because a lot of people might think that it doesn't say condotel in my documents. That has no bearing on what we consider a condotel. If a physical element is present, it is a condotel.
The big one, I mean, the one that's gonna smack you right in the face as you walk into the lobby is there's a front desk for check-ins. All condotels are going to have a front desk to check in the occupants, the people staying on a short-term rental basis, whereas a regular condo that allows short-term rentals legally within, it's a deed restricted, but they have to allow it in order to be able to do it, is not going to have that front desk to check in occupants. Whereas the condotel is definitely going to have a front desk to check in any guests to the property. So that's the big one. I mean, as soon as the appraiser walks in there, that's one of the ones that they're going to put. And also, when the condo questionnaire, mind you all, when the condo questionnaire goes out to the association, that's one of the questions that they ask. Is there any kind of facility to check in guests? I mean, that's probably not the exact verbiage, but that's what they're going to ask. And it's a very clear yes or no. If the association management answers yes, now the underwriter is going to come back to you and say, hey, listen, I need some more explanation here because this property appears to have a front desk to check in guests. And everybody knows that you're not going to have a front desk to check in guests unless you're a condotel.
There is a question now, if you want to pull that up, Nick. Question is, were you saying at the beginning that they don't appreciate as fast as regular condos?
Yeah, I mean, you would have to do some statistical analysis on that, but the rationale is that when you have restricted financing, because not every buyer that comes to buy a property is a cash buyer, right? And not every buyer that comes to property, a condo has 30% down. So you will note that the condos that and like a good example of this is the few condos. I'm going to use Florida as an example because we're the ones that have the most messed up market for condo financing. A condo that is approved for low down payment financing, like a condo that is approved for conventional financing or especially approved for FHA financing, you're going to note that those condos per square foot are at the upper end of the range of value. And as you start restricting the financing options, you're going to note that those tend to drop in the cost per square foot. Now, this taking all other factors into consideration. You'd want to make sure you're comparing apples to apples as far as location and quality and all that kind of stuff, right? But when you do that comparison, it's just going to be logical that if one condo requires 30% minimum down financing with rates in the high eights to mid to high nines, depending on if it's primary or investment, and another one allows lower down payment financing with lower rates, you're going to have a better chance of attracting a larger pool of buyers slash borrowers for the one that has less restrictions on the financing than for the one that has more restriction on the financing. If you have a larger pool of borrowers slash buyers, you're going to get a better chance of getting your price. Hence, you're going to have a better chance of appreciation versus the Condotel. So that's just an analysis I do there. We have to back it up then if you wanted to do some kind of a report, but I'm pretty sure that's what you're going to find.
Absolutely. All right. Well, we can go ahead and wrap it up then. Thank you, everybody, for tuning in. Remember, we do this 11 a.m. Eastern every single weekday where we go through the live rates and do a deep dive into a different topic every day. So we will be right back here tomorrow with a new topic to go over. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see everybody tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.